There are two simultaneous mergers and acquisitions visible in this week's data. I'm Thomas Meister. I'm the loan officer's agent. In this week's video of Gainers and Losers, we got some interesting stuff to show you and completely revamped Gainers and Losers dashboard. Get excited, guys, because this is cool. I haven't seen anything like this in the industry, period. So every single week, we're going to be getting out the top 10 gainers and losers for independent mortgage banks, for brokers, and for banks and credit unions. We're going to dive in and explore a little bit of the story today. I'm going to share with you guys the new dashboard. It's actually going to be available to you guys if you want to subscribe. I'll go through how you can do that in this process. And when you subscribe, we're actually going to have a full report that you guys will get on a weekly basis where you can actually go in and check companies individually over periods of time. So without any further ado, we're going to get started with this week's number one gainer in the mortgage and the IMB mortgage space, which is CrossCountry Mortgage. So CrossCountry Mortgage, no surprise there because they come in at number one, top three, on a pretty routine basis, right? But we want to see the full story. We're using Redder. Redder is a research tool where you can look up companies individually to see how they're faring and how they're producing. Over the last week, CrossCountry Mortgage net added 27 loan originators for $275 million of annualized growth, which, by the way, I am using a projected estimate in here, and I was so impressed how accurate this is. Because when you extract a data set with thousands of companies, you have to let the data work for us a little bit, okay? Because we can't get it all. So that's why if you want a Redder subscription, you want to deep dive into any of the companies on this week's list, link in the description below where you can get Redder access and you can see this report. So who is coming in to CrossCountry Mortgage this week? We're going to count the number of $10 million producers. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm going to give it to them every single week. It's kind of a barometer. How well is the company doing at attracting top talent, or people are leaving? Why? So you can see here some of the different companies people are going to. Mortgage Solutions of Colorado. These are the people joining, right? So Mortgage Solutions of Colorado has been losing a lot of people week over week. So you'll see that in the report when we get over there, okay? And who did they lose? So who left CrossCountry Mortgage? 1, 2, 3, 4, 5, 6, 7, 8. That's still a pretty big, to add $275 million of annualized production. Also lose, you can see right here, annualized production, right? This is technically over 14 months. That's how this is shown in Redder. They gained 468 million and they lost almost 200 million, right? So you can see the math right there, right? So CrossCountry Mortgage, if we come in here on this report, and I'm going to give you the teaser, right? Because this is the full report. You're going to have to subscribe and get access to the full report. And this is a work in progress, right? So if you see any glitches or anything that we can improve here, I'm going to take feedback. I'm going to make this better every single week. So CrossCountry Mortgage over the last week, let's look at this for the last 4 weeks. Okay, that's actually just kind of showing it right there. So let's break down them again. So CrossCountry Mortgage over the last 4 weeks, you can see they actually come in number 2 in terms of loan officers gained, but number 1 in terms of how much estimated production, right? Because you're going to have to click in here and actually review the full amount, right? If you want to go back, let's say a month, right? 300,000. It's pretty close. Well, it's not actually very close. Every loan originator at a company, right, does on average, how many originators do they have? And what's their 12-month volume? Well, just do math. That's so interesting to me to look at this data and to see some of these companies and the average number of production per loan officer at that company, right? When you just do math. Okay. So CrossCountry Mortgage coming in at number 1 for this week, net gain of 21, right? 20. Well, it says 26, but I think it was 21, 27. Now it was 21. No, 27. I'm not crazy. So coming in at number 2, we have the story of this week, one of the mergers and acquisitions. You can see it in the CrossCountry Mortgage gainers because you can see in here the Summit funding, right? So there's probably still some Summit funding people, still showing up in this report. Well, this is actually brand new. This got announced, I think on May 1st. And I have some friends over there. I technically did know that this was coming. So we have Highlands Residential Mortgage coming in at number 2 because they acquired the Equitable Mortgage Corporation. And Equitable Mortgage, you'll be able to see in here. So in the past week, net gain of $138 million annualized production. Well, that's because they have merger acquisition coming in with the Equitable Mortgage Corporation. So you 1, 2, 3, 4, 5, 6 $10 million plus producers coming in. There are more probably going to slowly trickle in, and we're gonna see that. over the next couple of weeks. Okay. So Highlands Residential, they've been, this chart is going to go back all the way to January. So you can kind of see how it's been performing. I've been talking about this for a while, and I'm so excited that I built this out for you guys. Okay. So you can see not just the flashy number week over week, you can see it charted out how well a company is performing. One thing of note here is you can see at Highlands Residential that the average volume per loan officer has dropped. Okay. From 11.6 million to 9.5 million. Okay. And that is in large part going to be because of this recent merger and acquisition. Okay. All right. So coming in at number 2, Mutual of Omaha. Let's dive in the rabbit hole just because, I see Mutual of Omaha on a pretty frequent basis. And I mean, they just do so much home equity line of credit business. Like they're not really a mortgage first company. Okay. Like you can see how much refinance business they do. You can see how much equity business that they do. They gained 11 people for $82 million of annualized production, but let's look at them. Okay. So someone coming from Sage Home Loans, isn't that a builder, right? Or a servicer, right? I don't think that this business it's not likely to continue, right? So I'm using this as the example this week, right? Like, look at this person. So much of this business is refinance business. They do not do referral-based business. We're really focused in this channel on the loan originators who it's their personal book of business, right? Like it's relationship-based, it's referral-based, okay? And so, beauty is in the eye of the beholder in so many ways. I'm just letting the data speak for itself, right? So in my eyes, me personally, okay, I don't really see Mutual of Omaha coming in at number 3, just because, yes, they gained 11 originators and it's 100 million. Okay, you saw the data. I'll let it speak for itself. I think the real number 3 this week is New American Funding. So New American Funding coming in at number 3, net gain of 8 loan originators. And New American Funding is also one of those companies, when you look at that chart, you can see that for the last, and really like for the last year, right? You can see how well a company has been performing. So this week, net gain of 8 loan originators, $26 million of annualized production. What did we have it guesstimated in there at? We had it guesstimated at 49 million. So it wasn't quite there, right? And this is every single week. I think this is actually exciting when you see what is breaking the norm. Like, are a lot of people leaving? And because this is what it should be, right? This is the average based on 6.1 million at New American Funding. Like how many loan officers they had and how big the company is, last 12 months production. That's the number. But the math says it should be 49 million, but it's not. It's 26 million, which is okay. It's good. It's for a large company like New American Funding. I mean, if all those people over the last 12 months, if all the people who work there today had worked there the last 12 months, their run rate would be 21 billion. Much, much bigger. Okay. So they've been on a crazy growth tear this year, right? In the last 12 months and longer. So coming in, we have 1, 2, 3, 4, 5 $10 million plus producers coming into New American Funding. And did they lose anyone? Well, they did, because it's $104 million. So 1, 2, 3 $10 million plus producers leaving, right? So gaining 130, losing 104 for a net gain of $26 million. Okay. So that's our top 3 IMBs. Okay. You can review this full report. I'm going to be sending this out on a weekly basis, included in the email. If you're seeing this on YouTube, you're not subscribed to the newsletter yet, there is a free version of the newsletter that you can easily hop on, which is going to include this top 10 movers, right? So top 10 gainers and losers for all 3 categories. We're going to move on to, we're going to first do all the gainers. So now we're going to do brokers, then we'll do banks. We're not going to spend a lot of time on banks. Then we're going to do losers in the same order: IMBs, brokers, banks. And if you subscribe to the full report, then you will be able to actually click in here and search. You can search in here. There's actually a chart graph. It only works if you're doing 4 weeks. So you can actually see all the companies with the same data, but chart it out to like how well they're performing, right? Which is, to me, I'm gonna make this better. Like, this is just the beginning, guys. Just the beginning. Okay. All right. For brokers, coming in at number 1, we have the Loan Factory. Loan Factory routinely on the top 10. In the top 3 gainers. I'm going to quickly showcase this because I want to see the difference, right? If they gain 13 originators, and the average loan originator, based on how many people work there and their volume, only does $1.4 million. It's really low. Okay. They should gain $18 million of annualized production. But what is it? It's $64 million. Okay. 13 net gain of 13 originators for $64 million. Who's coming in? Pretty big originator. They're not new or previously inactive. It's just a gap between their license, right? So if I click on it, I can dive in the rabbit hole, see where they came from. Again, link in the description if you want to get redder and you want to spend more time diving into this, right? So 2 $10 million plus producers coming in, and some pretty big producers. So they gained $93 million, but they lost 29. That's where the net of 64 comes from. So losing one $10 million plus producer this past week, right? So Loan Factory having a really good week over the last week. Coming in at number 2, with net gain of 10 originators, and it should be $24 million of annualized production. Well, that loads. Again, let's focus on this for a second. Nexa Mortgage has 3,700 and 37, 3737. I guess the kids should probably come up with that. 3737. My 8-year-old and 4-year-old do that now. That's so annoying. So $2.4 million. Okay. That's the average production per loan officer. And they should be gaining $24 million of annualized production, right? Because you can just do math. So let's see how that plays out. And it doesn't. It ends up being flat. They gained 41 for $64 million and they lost 31 for $64 million. That is abnormal, I guess you could say, right? Like, so they lost better people than they gained. And that's one loan, right? That's one $587,000 loan. So they gained net gain of 10 people, but no, this does not hold true right here. It should have been 24 million based on their average production per loan officer. And by the way, again, that is in the full report, something you can see in here, right? We'll take a quick break, right? If you go back to all, or I could do broker, and I can just search in here and say Nexa. You can see what Nexa's production has been. So it actually, that's interesting. So it went up slightly, but then it dropped down. Okay, so over the last, that's 4 weeks. Let's go back 16 weeks. That's how far back I have this data right now. Oh no, okay, so in this graph, both of these are reflective of all the way the 16 weeks to January, end of January. They've been gaining lots of loan officers. Their average has stayed the same, okay? And now their production has grown a lot, okay? So that part is true. So it's an interesting past week. I'm curious over the last, it's not full 6 months that it should have been 192 million, but it's okay. So I mean, that's interesting that's not that number. This number isn't in reality higher, okay? Because that's not the full year. Yeah, you'd think it'd be more. That Nexa would be adding more production, but they're adding a lot of loan officers, right? You can see how many loan officers they gained here again last year. Last year they've gained 1,300 originators for 2.4 billion, and they've lost 869 for 1.7. So they're still up and they're still performing well. So Nexa having a pretty good week on the gainers and losers. Okay. So who's number 3? Number 3, we have Barrett Financial Group. Barrett Financial has been on a tear. Okay. They're the number 1 broker in the country. But how should they be performing based on this data? Okay. So it's the highest so far. They have a lot of people there. So the average volume per LO is $4.9 million. So they should have gained $44 million of annualized production if you're bringing in 9 people based on the numbers. And they actually lost production. Okay? So net gain of 9, but loss of $3 million, right? So that's basically kind of flat. It's not good. It's not good to be flat when you're adding more people than you're losing, okay? To me, that's not a very good look, right? So gain of 24 for 114 million, loss of 15 for 116 million. Not going to spend too much time. Just want to count them. 1, 2, 3, 4, 5, $10 million producers coming in, and 1, 2, 3, 4. And one of them is a pretty big producer leaving Barrett. And we don't know where they are yet. It's still showing as inactive. Interesting. All right. So Barrett Financial Group adding 9 loan originators, but it's not really reflecting in the numbers in their favor in terms of, I would not call that a very successful week for Barrett Financial. Okay. And again, in the full report, you can click on this and you could just view, how well they are trending as a whole. Okay. So banks, we're just going to spend a little bit of time on this, not too much time, just because banks, just to reiterate, loan officers at banks most of the time are handed their business, right? It's not their personal book of business. These are not relationships that they've built, past clients, referrals from trusted partners. There's an exception to that. I know many a loan officer who are at these institutions, companies, but banks, right, are more depositories. So they're focused on holding deposits, and that's how they make a lot of their money. Loan officers at these companies, not really referral based, having their own book of business or making as much as other originators. But maybe they make that up by trying to sell slightly better rates, which isn't always true at a bank. So number 1 is JP Morgan Chase. I actually thought this was very interesting. I'm going to click it just because I think that this new report is badass. Okay. If we come in here to banks and let's see, based on the numbers, 18 weeks. Oh, we don't go back 18 weeks for all the banks, right? So we're just going to do last week. So JP Morgan Chase, you can see they've been on a growth tear. I just thought this was so interesting that they've been hiring a crap ton of people. Okay. So like a lot of people. And I just think to the industry as a whole, like what does that signal? Like what are they ramping up for? Are they ramping up for a refi boom? Like what does JP Morgan, Chase know that, the rest of us don't, because they're hiring a lot of loan officers, probably for call centers and probably for other, like not just call centers, but they're maybe in their branches. Why is that? Like why over the last 4 weeks they've added 269, 8 weeks. Like I put this in here. They're on a 5-week hot streak, okay, of adding people. Very, very interesting to me that they're doing that. Okay. So, all right, let's get back to the top 10. Not really going to dive much deeper into banks. You've got Huntington Bank, number 3, Truist. Okay. So I don't really see any of the banks that operate more like, lenders, right? Like mortgage companies, like mortgage first versus deposits first, like I just said. All right, so we're going to look at the losers, okay? Arvis Bank losing 49 originators. They've been laying off a ton of people, but I'll click this. I think this is very interesting because I was looking at the data. They are losing all the low producers. They're getting rid of them. I thought that was actually pretty interesting, right? Let's just invert this real quick in terms of loan officers lost, right? So Arvis Bank, their average volume per loan officer has gone up. That's super interesting to me. Last week, 49 originators, but their average volume per LO is up to 2.1 to 2.3 million. So Arvis banks, they kind of trimming some of the fat, you could argue. But hey, click in there if you want to look at the banks and you want to spend some time on banks. Power to you. Now we're going to come back over here and we're going to look at the losers for IMBs and for brokers. So number 1, obviously, Equitable Mortgage Corporation. Net loss of 12 loan originators, and that's because they were acquired. All right. So data's in. Equitable Mortgage Corporation is actually now a part of Highlands Residential Mortgage. So Equitable Mortgage is based here locally where I am in Columbus, Ohio. And so all we already kind of saw this, right? So the story is pretty straightforward. They're not really a loser. Okay. It's they're partnering with or merging, been acquired, sold, right? None of us may necessarily get the details, but coming over to Highlands Residential. So they're not really the number 1 loser. Sorry. Number 1 loser for this week in IMB world is American Pacific Mortgage. So losing 10 originators, and it should be for over $60 million of annualized productions. But let's see how the data ends up playing out. So based on the numbers, right? American Pacific Mortgage, the average, right? This isn't the median, by the way. So, should I do median? Maybe. The average is 5.6. So it should be $56 million production lost. But let's see. It's 30 million, right? $29.4 million. So last week, losing net loss of 10 originators for $30 million annualized production. Who'd they gain? They gained one $10 million producer. You can see they gained 30 million total, and they lost 17 for 60 million. So that's not good, but I guess it could have been worse based on the numbers. But it's pretty darn close, I would argue, actually. So losing one $10 million plus producer, okay? 56 million is what it could have been a lot worse based on the numbers, but it's actually only 30. Okay. So number 2, loser for this week. And I think this is interesting. Hopping back over here to the full report again, subscribe, link in the description if you want to see the full report. American Pacific Mortgage, Guild Mortgage. Guild Mortgage is on I guess you could see they're approaching a cold streak just because they have consistently lost people over the last 4, 8, 16 weeks. But I mean, just like Arvis Bank, their average volume per loan officer has gone up slightly. Okay. So losing some originators. I mean, again, over the last 16 weeks, it's only 6. Really, it's only 6 originators, and their average production is going up. Okay. Now, yes, over the last week, it should be a net loss of 8 originators should translate to $83 million annualized production, because at Guild Mortgage, the average loan officer does $10.4 million, okay, of annualized production. So let's look at the numbers. Let's look at the facts. Just the facts, ma'am. In the last week, it's really bad. It's really bad. It's way worse. It's way worse. Okay. So net loss of 8 originators, but for $227 million of annualized production. Okay. So gaining 10 originators for only $8.1 million. That would be why. Okay. And you lost 18 for $235 million annualized production. Okay. Let's take a peek. Gaining no $10 million plus producers. So could have told you that because of the total. Yeah. All right. So group going to CMG, more CMG. I'm seeing CMG on here. So we see a chain, a thread, okay, of there's probably these people I would guess are maybe a group or a branch, all kind of moving together, right? So 1, 2, 3, we're going to count it just because, hey, some loans could have closed in someone else's name or, transitional loan or something. So 3 $10 million plus producers leaving, but really it's this huge person. It's this group, right? Like huge group leaving Guild Mortgage, heading over to CMG. So they're probably the biggest loser for this past week. And we can't exactly count Oh no, so All Western. Okay, so that was actually different right there. So All Western actually coming in at number 3 on the biggest loser this past week for All Western Mortgage, for IMB lenders. Interesting, because they've been on the gaining list. So average originator there does $4.7 million. So it should translate to a loss of $28 million of annualized production. But it is a loss. It's not as bad. So net loss of 6 for $15.3 million, only gaining 1.4 million. So they gained, they didn't hire anybody who does existing production, and nobody really left who does a lot of production either. Probably no $10 million producers, right? So, I mean, it's not flat, but it's like bad, right? It's like, it's like not a good week for All Western. And Lennar, we're not even going to count them, right? But as I mentioned here, I guess these aren't honorable mentions. It's just worth showcasing who are some of the other companies, right, on this list that are growing. You can see CMG having a great week. We know why. And it's actually a really good week. They're probably one of the top growers for this past week. I would guess it's more than 85 million. Well, we know that because an $180 million producer joined them. So some other big losers, some honorable mentions. Mortgage Solutions of Colorado continues to lose some people. I don't know Simplify. Synergy One, net loss of 6, could be around $66 million annualized production. And then American Mortgage Exception comes. That's not PennyMac, is it? I think it is. Or AndyMac, sorry. Losing 6 as well for $42 million. All right, you can kind of see this on here, and you're going to get this free report. So if you want the full report, check out the link in the description. I'm not going to say it again. I guess I might say it again. All right, brokers, losers. Number 1 biggest loser for the brokers this past week, Coast to Coast Mortgage. 3.8 million is the average. So it's only 6 originators, but let's see how that number holds up in reality, right? 6 originators should be $23 million, and it's not. So they lost 2 originators for 7.5. I'm not going to click into it just because it's so small. And then 8 originators, gained 2, 7.5, lost 8 for 18.4. Okay. So, it's not horrible, right? MS Mortgage Services, they're not a servicer, are they? Like, I don't know this company. So 4 originators, $32 million. The losses are not as big. That's worth pointing out, actually, when you look at this report, is look at this swing. Right here, out of all the companies that qualified, in the top 10, it's a net loss when you run the numbers against each other. All the originators gained, all the originators lost. It's a net loss of 14, okay? And it's a loss of $1.3 billion of annualized production. Like, that's the net estimated difference between those things. And when you come down here to brokers, you can see that out of all the companies qualified, it's a net gain of 49 and $55 million annualized production estimated. Remember, because a lot of this is not perfect yet. Perfect doesn't exist. All right, AMS Mortgage. Or no, sorry, I think we're on. No, yeah, we're doing AMS, right? Did we already grab that code? We did. This is one thing that could be streamlined, is I need to build the code in so it just comes over. Okay, so where are they based out of? Fountain Valley, California. I know Fountain Valley. I'm from Orange County. Okay, so net loss of 4 originators for $37 million of annualized production. That's actually pretty close. It should be 32 million. It's 37. Okay, so gaining nobody, losing 4 originators for that total. Interesting. Okay, Expert Home Lending. They are one of the largest, okay, brokers in the country. Losing 4 originators, $6 million average production per loan officer. It shouldn't be dramatic. Should be $24 million. Let's see how it plays. It's $60 million. Ooh. So gaining nobody, losing 4 for a net loss of $60 million annualized production. Where'd they go? They kind of scattered to the wind. Okay. No theme here. 3 $10 million plus producers leaving, and you can see here where they went to. So interesting week for brokers as well. We already covered the losers on the bank side, just because that's nothing necessarily special and unique. So if you made it this far in the video, thank you. And I appreciate you. Like and subscribe to the video. That way you get notifications every week when I drop the new gainers and losers. You'll get notified immediately once it drops. If you want to subscribe to the full report, so that way you can play to your heart's content, you can search your company, you can search your biggest competitors. That does not exist. I have not found any resource that does this, that showcases this kind of report, as well as charted, like stocks, how well a company's been performing. So it'll only get better from here. I appreciate you again. I'm Thomas Meister, the Loan Officer's Agent. I will see you in next week's video.